Well, AIG reported results this morning, posting profit for the third time in 4 quarters. Meanwhile, the insurer is reportedly ending its relationship with Goldman Sachs. Bloomberg's Hugh here to talk with us, and of course Steve Leuthold staying with us as well. And Hugh, first let's just take the earnings report. I mean, the profit for the third time in 4 quarters. This has got to be good news, though, for those who either just bought into AIG or held on.
Right, and shares are up in pre-market. I mean, $1.5 billion in net income sure beats a $4.5 billion loss, which they had a year ago.
Right, and the write-downs narrowing at AIG,
right,
on their path to repaying the loans. I mean, are they ahead of schedule, or are they just right on target?
I think they're pretty much on target. I think what you saw this quarter is that their investment income really surged. It turned around a lot, and that flowed through into all of their subsidiaries, so that they were able to post a lot larger income than they had a year ago.
Right, and what about their insurance units?
You see, so Ben Moshe had in these recorded comments they posted on the website was kind of boasting that AIG's back. He's touting the increased stability in these insurance subsidiaries, and like I said, their investment incomes come back a lot, so that these units are able to post much better results, even though there was some catastrophe costs.
Right, indeed. And is it enough, though, at this point for people, for you who covers this so closely, for people to start to say to you, look, AIG may recover from a junk status?
It's possible in the future that this can be seen as an inflection point in which the possibility that AIG actually survives as an independent entity may seem more likely than not.
Yeah. Steve?
Ben Moshe, he's done a pretty good job, hasn't he? Don't you think?
He's done a good job. He's had the benefit of capital markets returning. Right. I have to think that him being a smart guy, when he took this job, could kind of see that maybe things would be turning and that maybe his job would be easier than his predecessors.
We had some big guys come in and buy AIG shares. Steve, were you ever tempted?
Well, actually, I personally own a lot of it.
Personally?
Yeah,
not
personally.
Through the funds, but
no,
personally.
We're not quite that aggressive with the investment management with other people's money, but before they had the reverse split, down when it was trading around $1.50 and so on, I did buy quite a bit of it myself, and I'm convinced I'm going to make a lot of money on that before I'm done.
Purely for trading or for as a long-term strategy?
Well, we might call it a crapshoot maybe, but no, but it looks, I really, when you look at it and the value that they have in their operating companies, and as he gets rid of these and sells them off and comes to more agreements with the government, I think, I think it's an interesting spec.
I think anytime when you're depending upon the government to, I guess, to restructure its potential future, I think it's a speculative bet. But at the same time, there are people like Bruce Berkowitz who really bought into this.
Right, exactly. So, convinced into the story. Okay, so investors getting more confident, but then you heard that news from the New York Times that Goldman, that they're leaving Goldman.
Right, so that's certainly a reversal of fortunes when you have AIG dumping Goldman Sachs.
Yeah.
There's reputational issues. So it's certainly.
Why are you laughing, Steve?
Well, everybody's picking on Goldman these days, aren't they?
You don't trade with them, though, right? Or
no.
They're not. You're not a client of theirs.
No.
Okay. Is that for what reason?
Well, we prefer to trade with people that don't have big prop desks. So we like straight agency trading and people that don't have those potential conflicts of interest.
Conflicts and also risk as well?
No, not necessarily.
Okay. All right, guys. Thanks so much, and thanks, Steve. Thanks, Hugh, for joining us. I'm talking about AIG. I know you've done a lot of reporting on this company.